The Lost Decade. Japan's bubble economy collapsed at the start of the 1990s. The government and the Bank of Japan, BOJ, caused the collapse by trying to cool the bubble down. In 1989, the Bank of Japan changed to a tight money policy and, in 1990, raised the official discount rate to 6%. Also in 1990, the Ministry of Finance requested that banks restrict their financing of property assets, and the government introduced a new system of land taxation, including a landholding tax, in hopes of destroying the land myth. The Nikkei stock average and the price of land fell from their highs in December 1989 and autumn 1990, respectively. After the bubble, the Japanese economy entered a long period of stagnation. The economy picked up several times during the 1990s, but a full recovery never happened. Financial institutions ended up with very large levels of non-performing loans as a result of the collapse in share prices and land values. Corporations suffered from the three excesses: excess capital investment, excess employment, and excessive debt. Corporate earnings fell, the government budget situation got worse, and unemployment rose. It was one gloomy piece of news after another. Though the government did not officially accept the fact, the Japanese economy had fallen into a deflationary spiral, a vicious circle where falling corporate profits leads to declining capital investment, falling employment, falling wages, stagnating consumption, and then to further declines in corporate profits. Government negligence and the failure of government economic policy, such as putting off dealing with the non-performing loan issue, were major causes of the prolonged economic stagnation. This period is called the Lost Decade. Non-performing loans. During the bubble period, banks lent out vast amounts of money to companies taking land and stock as collateral. However, once the bubble collapsed and the economy stagnated, many companies started experiencing financial difficulties. They were unable to repay even the interest on their loans, let alone the principal. Because of the drop in value of this land and stock, banks were unable to recover their loans. Thus, banks ended up with huge amounts of non-performing loans on their books. According to a 2002 statement from the Financial Services Agency, the total value of non-performing loans held by banks was 43.2 trillion yen. Non-performing loans became a drag on the Japanese economy, and how to dispose of them became a major political issue. The government instructed banks to conduct a strict self-assessment of their assets and keep sufficient reserves to cover any losses. On their accounting sheets, banks had to calculate expected losses for three types of borrowers. 1. Borrowers likely to go bankrupt. 2. Effectively bankrupt borrowers. And 3. Actual bankrupt borrowers. The banks were legally required to keep reserves for loan losses based on the categories of borrowers of non-performing loans. The Japanese tax code does not allow banks to write off loans unless a company actually goes bankrupt, and thus the increase in reserves required for loan losses reduced the profitability of banks. This is how the problem of non-performing loans was slowly solved. By 2004, the total value of outstanding bad loans had fallen to 26.6 trillion yen. As banks disposed of their non-performing loans, the Japanese economy finally began to show signs of recovery, and began to emerge from its long period of stagnation.